Welcome to Bears in Exile. Today is September 11th, and we're going to take a special look at TNA. Alright, TNA, one of my favorites over the long haul, trading-wise, which has been a complete and utter disappointment over the last month or so. But I try to keep a very close eye on this one. You know, small caps do, well, sometimes lead. They're always important. And regardless of leading or not, they do provide an insight into the overall attitude of the market. Well, on Friday we had the ugly little spinning top looking thing that broke through the major price consensus level on its way towards the lower price consensus level and slightly backed off of it. CCI ticking down, 14-day RSI moving average still going up, fast and slow stochastic meeting up with it, which we've been following in the nightly overview. Downtick on the RSI, downtick on the histogram, downtick on the MACD. Well, what can we tell from all this? Well, of course we know that there's a floor down here, right about the $35 area. And if we were to break that, it would become ugly really fast. Well, I wanted to look at the price potentials tonight just to get a feel for what kind of ranges are we looking at and where can it go. Well, here we are with black box number 1. We can see that the minor trend points down to 35 on the low side. And let's say we were to get some nice little run. We can also see that its upper range is almost at 49, which would be really cool, which would also be a retest of the bearish bar. It would also be slightly lower than the previous peak that we had a couple weeks ago, and would probably fool a lot of people if it were to go up there. Certainly it would break the extreme trend, and that's really all there is above us. We have the 200-day moving average way up here in the 70s, but since the short-term moving averages are pointing down for the moment, let's say that it goes down and tests the lower minor trend at 35 and breaks it, and that would be the floor that we currently have, that has been tested and bounced off of twice now, actually 3 times. But if it were to break this, we have correlation of the upper major trend and the lower extreme trend right above 25, actually right at 26, between 26 and 27. And if everything were to fall apart, Euroland, you know, rolls over, all that jazz, the worst case scenario at the moment, which is really darn ugly, is down here just above 13. Now I can't really imagine 13 anytime soon unless we have a market crash. But if we do have a market crash, looks like the world is ending for real, 13 should be on your radar. So very interesting. But I do think that a dose of optimism at some point in the near future would be a nice bar retest, and completely makes sense. Going back to our standard layout, I want to do a good look at the 60-minute. We did have an uptick on Friday. Now, upticks and downticks are not as powerful in the faster time periods than on the daily, but nonetheless we had one. It gives us an upper target just above 40, which you know, these type of things in this time period are often met intraday without any trouble. So just above 40 would be nice. It would fix this, and it would be free to continue down, of course. Uptick on the CCI, downtick on the 14-day RSI moving average, not a good sign. Stochastics low, and these of course can pop up and move through the 14-day RSI moving average as it continues to move lower. And as you can see on the chart, it takes only about 2 to 4 days for a complete wave of the 14-day RSI moving average in the 60-minute time period. So another day or two of this marching down and it'll get to the bottom. In that time period, we could see the stochastic go all the way to the top and all the way back again to the bottom, meet up with it, and then have a nice move to the upside. But that's what I'm sort of thinking. RSI itself ticking up, and histogram ticking up, MACD still ticking down. Do we have some divergences? Well, we have one in the... no, we don't. This is lower than the current, so that does not work. I don't really see any real divergences except for a negative divergence on the CCI. Just having that is extremely minor and should not be trusted just by itself. You can see that the middle Bollinger Band is above the short-term moving averages, and if they only get a uptick fix, the middle Bollinger Band will probably still be above them, and then it'll be ready for a move down once again. And if it only travels that distance, I would imagine the both the stochastics will only get so far as the 14-day RSI moving average, perhaps just a little bit above. And if they flip over at that point and move in lockstep with the 14-day RSI moving average, that will not be a good sign, which would coincide with the short-term moving averages pointing down. And so we really need something positive on Monday, or else we're in for some pain, in for some chop before it finally gets a real move, thanks to the daily, to the upside. And there you have it. There is a more in-depth look at TNA. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.